Hope you're having a good weekend. So we just concluded the month of July. I hope you traded safe. Okay, so last week we had a pretty challenging week. Okay, so if you're in our Telegram channel, you will know that we kind of just broke even for the week, right? We just had a very small gain of 8 pips, which is not really a gain, but nonetheless, I think it's good that we didn't actually lose money this week, okay, or rather last week, the week that we just traded. Now, the entire month of July had been a very difficult month because there were literally conferences after conferences every single week. So if you really struggled during the month of July, right, I hope that you do not give up, okay? You just keep managing your risk because next week it's looking like an easier week because we don't really have much conferences. Okay, so what I want to do is I want to run you through the markets for the next week, okay, like the economic news as well as the key levels and the bias. Okay, so without further ado, let's look at the economic calendar. Now, next week we are starting the month of August, so it will be the 1st of August to the 6th of August. Now you can see that next week we have a lot of high impact news. We have this RBA rate statement, we have the non-farm payroll right here, and we have another non-farm payroll right here. Now, non-farm payroll weeks are known to be weeks where it's very whippy, okay, but the good thing about this kind of whippy weeks is that the movement tends to be cleaner, okay, meaning that what usually happens during this kind of weeks is that the market will break support and then unbreak the support, or perhaps break the resistance and unbreak the resistance. So basically fake out plays. So if you focus on fake out plays for this week, chances are you're going to make quite good money. Okay, it's not the kind of whippy weeks where it goes up, goes down, and goes nowhere. This is the kind of the week where price will break a level, but after that unbreak it and the movement will still be quite nice. So if you're able to identify these key levels, then you're able to get in at a good price, right, with a very small stop loss and see profits are relatively fast. Okay, so this is what I always do every single week. I always look at the Forex Factory economic calendar first. Okay, so right now we have a couple of new subscribers, right? If you are new to the channel, right, first and foremost, welcome. Okay, we do market outlook analysis every weekend to prepare you for the new trading week ahead. Okay, if you are joining us on Telegram for the first time and you are watching this video first, right, please do me a favor, please hit the subscribe button. Okay, it really helps the channel, and there are many good content that me and my team has prepared for you on this channel. Okay, so just check that out. And as always, for this market outlook video, what I'll be doing is I'll be using the MPE trading strategy, which is taught in the free day trading guide. So you can see this is the free day trading guide that I've prepared for you. It teaches you the candlestick pattern, the stages of the market, and even the MPE trading strategy, which I will be applying to the markets shortly. Okay, so in a nutshell, MPE stands for market condition, price level, and entry. Now, I won't go into that in this video because I want to show you the key levels to focus on. I want to break down all the biases and key levels that you should focus on. I don't want to run through this guide right in this video. But what you need to do if you are new is you just need to head over to this website. I will leave a link to this website in the description down below. Click on it, just input your email right here, and we'll send it to you. Okay, so without further ado, let's look at the markets, which is the main reason why you're watching this video today. Okay, so please take notes because next week it's going to be a good week to trade, but that doesn't mean that the market levels are very obvious. Okay, in fact, many of these currency pairs that I'll be running through with you right here, it's not very clear. Okay, so I will not exactly tell you what you should be doing for all of them. Sometimes I will just tell you the key levels because sometimes it's just not clear for some of these currency pairs. Okay, so first and foremost, this is DXY, which stands for dollar index. Okay, so this is the first thing that I always look at every single week. Now DXY is pretty interesting because previously we were in an uptrend. Okay, you have the high here, low, higher high, higher low, higher high, and look what happened. Price actually broke on Thursday. This is Friday, this is Thursday, and on Thursday price actually broke below this low and closed below this low. Okay, so there seems to be a change in the trend, and this trend line which I drew previously, okay, was broken as well. Okay, so for this reason, I would say that DXY, it's bearish right now. Okay, in fact, if you were to do the market condition analysis, which I taught in the 3-day trading guide right here, okay, you can see that this is a high, this is a low, this is a lower high, and this is a lower low. So this means that the market is in a downtrend currently. Okay, so in a downtrend, we should be looking to sell. Okay, if you are new to trading, please do not go counter trend. Okay, it's the fastest way for you to blow your trading account. Okay, so please do not do that. Now, back to the candlestick charts. So we understand that the market condition is bearish. The next step is price level. Okay, we don't just want to sell short because it's bearish. We want to know where do we sell. Okay, remember, you can get the direction wrong, but if you get the price level or the timing wrong, you will still lose money. This is why trading is so difficult, because you must get everything right. You must get the direction right, you must get the key level right, and you must get the timing right. If you get one of these wrong, then you will lose money. Okay, you could, let's say this is bearish, but you started selling right here and you put your stop loss here and you get stop out, even though maybe you are perhaps right. Perhaps price comes up and then it comes back down, and then you are already out of the trade because you got in at the wrong price level. Okay, so with that being said, there are a couple of key levels that you should focus on. Okay, this one is not too clear. I do not really know which price level will act as resistance, but the first one, immediate resistance, will be this level here. Okay, you can see that this was the previous swing low. Okay, so this is obviously a resistance, and you can see that price on Friday didn't manage to close above it. Okay, in fact, it closed on it, right? So when Monday opens, I do not know if it just carry on going up. Okay, so this is the first price level. This is the second price level. Okay, this high, you can see something like the left shoulder, head, and potential right shoulder right here. Okay, but the strongest level of them all, I believe, will be this level right here. Okay, because this level right here has been touched multiple times. Okay, you can see that right here was resistance, here almost touched, here was resistance, and here was support, and here was resistance. More importantly, we have this ascending trend line that was broken, and if price were to retrace, then there's a lot of confluence. We have a strong level, and we have the ascending trend line that was broken. So I would say among all these three levels, this will be the strongest level. Ideally, I would look to sell here, but again, I do not know if price is going to just start selling down from here or from here. Okay, so this is why you need to watch out for the last step in an MPE trading strategy, which is entry trigger. Okay, sometimes you do not know which resistance is going to hold or which support is going to hold, so you need to watch out for an entry trigger, which could be in the form of a hammer, shooting star, bullish engulfing, bearish engulfing. Again, if you do not know what I just said, this is provided in the 3-day trading guide, so please go grab it. It's free. I don't need your credit card details or anything, so please go grab it. Okay, so that's the bias for DXY. It's bearish, and we're probably looking to sell. That means that we are expecting dollar to weaken. So that means that we are probably looking to buy euro dollar, pound dollar, Aussie dollar, Kiwi dollar, and short currency pairs like dollar CAD, dollar yen, and dollar franc. Okay, so that's the game plan. But of course, what I'll do next is I will go through each of these currency pairs for you. Now, this is euro dollar. Okay, euro dollar, it's a bit confusing. Okay, so just bear with me. So euro dollar previously was bearish because we have the low, we have the high, lower low, lower high, lower low. But what happens is that this trend line here has been broken. Okay, so this descending trend line has been broken, showing that potentially there could be a change in the trend. Okay, however, if you look at this recent swing high right here, okay, let me just zoom in so it's clearer. This recent swing high here, price did briefly break above it, okay, but it's not a very clean break. Okay, it's not a very obvious break. It's not like it closed somewhere here. It just closed slightly above, and the moment it closed above, the next day price closes back below. Okay, and the other thing that we don't see is we don't see a series of higher highs and higher lows, something like this: high, low, higher high, higher low. We don't see that. So for this reason, I would say that it's too early to gauge if euro dollar is in an uptrend yet. Okay, it's kind of like a ranging scenario right now, right? Maybe it will have to consolidate a bit longer before it makes its decision about whether it wants to keep its downtrend or it wants to do a full-on reversal. So for this reason, I recommend that you do not trade this currency pair if you are a beginner, okay, at least on a daily time frame, right? If you want to go long, the bare minimum would be to wait for price to come down, let it break this high here, so that we have a high, low, high, then you look for a retracement down back to this level, okay, and then you look for a candlestick pattern. Okay, again, I do not think we will get this trade set up next week because a lot of things needs to happen, but I just want to highlight to you that right now the market for euro dollar is not that clear. Okay, I cannot tell you that this is quite certain that it's bullish, at least based on this current price movement yet. Okay, what might even happen is that price might just do this and then it starts selling down. Okay, what might happen is right now price is just whipping all the stop losses here, because this was a swing high, right, and this was a swing high. What a lot of people do is they put their stop losses somewhere above the swing high, and the market just goes up to trigger the stop loss, and then after that starts selling down. Okay, so between the two, I prefer that you wait. I prefer that you wait for price to come down, make a higher high first, then look for a long opportunity. I'm not too keen on selling right here, because this movement up is also, I mean, it's not very bullish, but there's still some bulls in this movement. So I would still prefer to just wait for a series of high highs and high lows for the highest probability trade setup. Okay, so that's euro dollar. Now pound dollar is a bit clearer. Okay, it's a bit clearer. Now pound dollar, previously it was trending down, okay, because you have a low here, you have a high, lower low, low high, lower low. But look what happened to this. Okay, let me just zoom in. Now, on Thursday, price actually closed way above this level. Okay, if you contrast this to euro dollar, you can see that euro dollar just closed barely above, but pound dollar closed pretty substantially above this level. Okay, so I would say that this level is broken and it's a bit clearer. So this downtrend seems to be broken already, because your series of lower lows and lower highs has been broken. Right now we have this lower high is broken, so now we can kind of like have a higher high. Okay, so I would say that this is bullish. I would lean towards buying. Now on Thursday it closed above, on Friday it retested this. Okay, so the last thing that we need if you are applying the MPE trading strategy is you need an entry trigger. Okay, so this is not a good candle, this is almost like a engulfing, bearish engulfing pattern. So what we need to see to validate that this support is valid is that we need to see a candlestick pattern here. Okay, suppose on Monday when the candle close we get a doji, something like this, then we can go ahead to take this trade. Okay, or better still, if we get an engulfing pattern, then we can go and buy this pound dollar. Now what I like about pound dollar is that there's quite a lot of space from here to here. It's almost like 300 pips. Okay, the next significant resistance zone that I see is this level right here, which is the recent high. Okay, so if you're able to get in at, you know, a very good stop loss, or rather tight stop loss, maybe something like this, and you're able to hold it towards this level, you're looking at a risk reward of 1:3.67, which is pretty good. Okay, so just watch out for this. Again, what I will do is I will send out signals to the Telegram channel right here if I see any of this. Okay, my team monitors the market almost 24/5. Okay, not 7. The market doesn't open on the weekend, but nonetheless, you know, if you struggle with finding these setups, don't worry, that's what our Telegram channel is for. Okay, so if you are a YouTube subscriber and you haven't joined us on Telegram, please join us here. Okay, it's free. Again, the link is in the description down below. Okay, so this is pound dollar. Let's move on to dollar franc. Dollar franc is also pretty clear, which is why I recommend that you stick to this. Okay, you should stick to pound dollar, you should stick to dollar franc. Try to avoid euro dollar. Anyway, euro dollar and dollar franc is just the opposites of each other. But for dollar franc, it's clearer. Okay, so right here in dollar franc, it's definitely bearish, I would say, because we have a head and shoulder pattern here. This is the left shoulder, this is the head, and this is the right shoulder. In fact, if you watch my previous market outlook videos, I did talk about this pattern even before it happened. Even when price was somewhere here, I already said that this is a strong level. You have to watch out for this level. Okay, so I hope you actually watch this, right? I hope that you took the time every week to watch my videos and actually take note of the key levels. Because if you didn't know this and you see this candle and you started buying into it, you will have lost money, because this candle was pretty bullish, right? This looks like engulfing pattern, but you're actually buying straight into resistance. Okay, so this is the value that I'm trying to bring to you by creating this kind of market outlook video, so that you will know beforehand the key levels to watch out for. So right now, this is the high, this is the low, lower high, lower low. Okay, so market condition is bearish. Last week I did talk about this level. I say this level is very strong. I want to see that it's broken. Okay, true enough, we got a break on Wednesday, but we didn't get a retracement up. Okay, so next week I'm expecting price to retrace. Okay, if the price doesn't retrace, then do not chase it, because right now I would say we are very close to support. You can see that this was the high, so I would say that we are very close to support. So just be patient, wait for price to retrace to this level, which is really the neckline of the head and shoulders pattern. Look for a candlestick pattern here, and then you can short it down. Okay, please do not be a hero. Okay, very important. Please do not be a hero and try to buy here. Say, oh, there's a doji here, let me buy it up since we're at support. Okay, this is not the way to trade if you are a struggling trader, if you are not yet profitable, or you are new. Please do not trade like that. Okay, you trade like that, you're going to lose money because you're going counter trend. Okay, it really takes a lot of experience to trade counter trend, and most of you are not ready for that. Okay, you need to learn how to go in the lower time frame to validate that the lower time frame trend has changed before you can buy it up. Okay, that's something that I don't really teach. Okay, I don't really cover in the 3-day trading guide, because really there's no need to trade counter trend when you can have good setups like this, like with the trend, and shorting with the trend and making money. So really, please do not buy. Okay, this is a warning, right? If you buy, you lose money, then please take a lesson from me and please do not do it again. Now moving on to Aussie dollar. Aussie dollar trend is bearish, very clear. You have a low here, high, lower low, low high, lower low, low high, and so on and so forth. Okay, market for this is very clear, it's bearish. Okay, and you can see that this was the recent swing low and price was resisted. Okay, now the problem with Aussie dollar is that Aussie dollar is now right smack in the support. Okay, if you were just to scroll back in history, you can see that this was resistance, 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 and here was support. Okay, so right now price is parked right at support right here. Okay, so please do not start selling, because you sell, you're selling into support, and this is resistance. Now I don't know next week will we get a close below this level, but if we do get a close below this level, then potentially we could do a breakout trade towards the next level, which is 0.7237. Okay, this level, if you just to scroll back, you can see that it was actually a resistance here, resistance, resistance, and kind of like a support here. Okay, so this is the next level I have for you. Be patient. Okay, if let's say by the time price closes below this level, it's somewhere here, please do not chase it. Okay, please make sure that you have a good risk to reward. Okay, if let's say the entry is here and let's say your stop loss is something like that, and you can see that the risk to reward doesn't make sense. So if you're going to do the breakout play, make sure that your risk to reward is still at least something like 1:1.5. Okay, it really depends on how the candle close, but please, right, do not chase the market and start shorting when it's too low. Okay, just take note of this. Now moving on to Kiwi dollar. Kiwi dollar, I don't recommend trading this. Okay, this is entire mess. Okay, in fact, I would call this range bound. Okay, because price is just whipping between the support here and the resistance here. Okay, if you change to the line chart, it's quite obvious that this area is a consolidation area. Now I just want to point out that this is looking like a potential inverted head and shoulders pattern. This is the left shoulder, this is the head, and this is the right shoulder. Okay, so between this level and this level, it's pretty tight. Okay, it's just about 100 pips. And if you are trading daily time frame, by the time you get a confirmation, like for example this doji, if you enter here, let me just show you an example. Let's say you traded this doji and you did something like this. You can see the risk to reward is pretty bad. Okay, it's 1:1.04. So I don't recommend that you trade within this zone. Okay, I would advise you to just wait for price to break below or break above. Okay, if it breaks above, just wait for the retracement down, look for a candlestick pattern, and you can buy. Same thing for the support here. If price breaks this support, just wait for price to retrace back up, look for a candlestick pattern, and then you can shut it down. Okay, this is how I recommend you trade it. I do not recommend that you trade within this zone and buy and sell. Okay, it's very difficult and it takes a lot of experience. So moving on to dollar CAD. Dollar CAD is also a bit tricky. Okay, dollar CAD, previously I did talk about this trend line. I said that ideally I would want price to spike down to this level and close back up, kind of like a doji, but we didn't get that. Okay, in fact, price just broke down and broke this trend line right here. Okay, now for dollar CAD, I would say that it's still bullish because we have the high here, we have the low, higher high, higher low, higher high. Okay, and this low is not broken. There is no candle close below this low. Okay, so you can see that price on Friday found support here. Now the problem is that this level, okay, let me just zoom in. The problem is that price is at support, but there is immediate resistance right here. If you were just to look at this low, okay, let me just switch to the line chart. It should be clearer. Okay, maybe I just plot it like that. Okay, this high here and this low here, switch back to the candlestick chart. You can see that this was resistance, this was support. So this will definitely act as resistance, and of course this trend line here, this broken trend line will act as resistance as well. Okay, so for this reason, I don't recommend that you just buy right here because here is pretty close. Okay, if you buy here and price is resisted here, you don't have much space. Okay, so what I recommend is that you wait for price to break above this and break above the trend line, okay, to confirm that this entire zone of resistance is broken, and you trade the retracement back to this level. Okay, so that will look something like an inverted head and shoulders pattern. Left shoulder, head right here, and right shoulder right here. Okay, that's how I would recommend trading it. Okay, you probably need to wait. We may or may not get it next week, but just be patient. Okay, again, I've really ran through other currency pairs which are clearer, which I recommend. This is not something that I recommend because it's a bit more tricky, but just take note that the uptrend is still intact. Of course, if this low right here, this line 1.2429 is broken and we get in a sell down, then I would say that this dollar CAD is no longer bullish because this low is violated, this swing low right here is violated, and we are officially in a bearish trend. Okay, so just take note, this one, it's a very fine line between buying or selling. We just need to watch for this zone, whether it holds or not. If it holds, it's bullish. If it doesn't hold, then we are bearish. Okay, so be flexible when you want to trade dollar CAD. You have to see the key levels and see how price reacts to these key levels. So dollar yen, it's kind of mixed. Okay, I would say that dollar yen, it's more bullish because we have this inverted head and shoulders pattern. We have the left shoulder here, head and right shoulder. Now I would say that this is more of a reversal play because the inverted head and shoulders pattern is a reversal chart pattern, right? But I would say that I would still think that this is a good setup because remember, if you look at this entire movement, okay, if you were to just look at here, we are still generally in an uptrend. Okay, at least based on the higher time frame, I would say that this is more up than down. And right now price is actually at a very strong level. Okay, if you were to look back historically, you can see that this was resistance, this was resistance, this was support, and of course right here, which is the most recent price action. Okay, so I would say that price is a very strong key level. Okay, so this one is not exactly entirely bullish. It's more like a reversal play of a chart pattern. Okay, one thing to note is that on Friday, this candlestick pattern right here is not very convincing. Okay, it's not even a piercing candle. Okay, because a piercing candle must be 3/4 of the candle's spiral candle's body. This is not 3/4 yet. Okay, probably this is about half. So I would say that if you want to buy off this level, you have to be a bit more patient. Look for a nicer candlestick pattern, maybe a candlestick candle that closes above this high, or maybe if it starts consolidating right here, look for another candlestick pattern. Okay, I won't just buy on Monday when price opens, because personally I'm not convinced that this candle is a good candle to go long, but we just need to see the movement going to the week. Okay, again, I'll send it in the Telegram channel if I see anything, so don't worry if you don't want to watch the price action for this. Okay, my team will be watching this. So moving on to gold, it's a bit tricky. Okay, I would say that gold is bullish because right here we have a double bottom, first bottom, second bottom. Price close above, retested it, retested it. Okay, so market condition is bullish, except that right now we are in consolidation. This is the entire zone of consolidation. Okay, so other than that, I don't have much to say about gold. I don't recommend that you sell here and buy here. Okay, I recommend that you wait for this consolidation to be over, wait for the retracement down and buy it up. Okay, because if you do it this way and you get it right, chances are you're probably going to catch a very nice movement up. Okay, probably to the next level, which is somewhere over here. Okay, you can see that this is resistance, 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 and here was support. Okay, this is how I would trade it. I don't recommend trading within a range because I hate trading range movement because it just goes up and down and down, up and down. And sometimes you do not know whether should you lock in your profit or should you wait for price to hit the opposite end of the range. Okay, so it's my personal decision to stay out of this kind of trades. But if you want to trade it, right, please be very careful, right? Please make sure you know what you're doing. Okay, if not, just listen to what I have to say about waiting for price to break this high, look for the retracement and look for a candlestick pattern right here. Okay, that's how I would do it. Euro pound also a little tricky. Okay, previously I did talk about this trend line. Okay, I connected this low, and right here. Okay, in fact I made a judgment call last week to say that I wanted to buy up. Okay, and true enough, I think price broke down. Okay, lost money on this one because we went long here trying to pick the bottom, but price just closed below. Okay, so right now price has closed below this trend line. Okay, you can see that on this day, 27th of July, price closed below this level. Okay, this level here, which is the left shoulder as well as the ascending trend line. And on Friday, price seems to be resisted right here. Okay, so this level is going to be very important. Okay, if next week price is resisted, then you can look at continue to sell this currency pair. Okay, but if let's say price were to go above, okay, let's say price were to close above this level, then what I would say is that this entire zone right here is actually a fake out zone. Okay, it's a bearish fake out. So what market was trying to do was trying to whip out all the stop losses. Okay, assuming price closes back above, then the market actually whipped out all the stop losses. People who placed their stop loss below here, people who, like us, who tried to buy right here. Okay, so really depends on this key level. This key level that I drawn for you is very important. I want you to watch this level very closely. If price is above, then it's bullish. If price is below, then it's bearish. Okay, very straightforward. We just need to wait for the market to show its head. NZDUSD. Okay, NZDUSD, it's pretty clear, just that the market has been very choppy right here. Okay, NZDUSD is an index. Okay, index always goes up in the long term, so it's still in an uptrend. There's no reason to go short, at least on the daily time frame. You have a high, low, higher high, higher low, higher high, higher low, higher high, higher low. Okay, and previously I did mention that this entire zone is support. Okay, in fact last week I plotted this arrows. It's still valid. Okay, I believe I plotted it last week, not too sure, but this is definitely strong support, and price when indeed started selling down. And on Friday, okay, we have this very nice pin bar. Okay, this is a pin bar, so I would say that actually on Monday, if you want to do it, you can actually go long on the market when the market opens, and place your stop loss just below, because this is actually a plus setup in my opinion, right? Remember, we are using the MPE. Market condition is bullish. Price level I've given you is the previous high right here, and the last thing that we need is an entry trigger, which we actually got on Friday. Okay, so this is actually looking like a very good trade setup. In fact, I think you probably will get a bit of confluence if you were to draw this low with this low here. You get confluence. So I would say that this is a good setup. This is something that I recommend that you trade next week, you focus on. Okay, just make sure that you manage your lot size correctly, because NZDUSD 100 is an index. Okay, and index, the lot sizing is different, and the price feed varies from broker to broker. So just be very careful about this. Now, I have pound yen right here. Okay, pound yen is still bearish, so let me just walk you through. This is the low, this is the high, this is the lower low, lower high, lower low. This was the recent swing low which hasn't been violated yet. Okay, you can see that price on Thursday actually pushed all the way up to here, but it didn't actually close above, and it didn't actually do a, you know, like a big movement up. So for this reason, I would say that pound yen is still bearish. Okay, just be very careful that right here, if you were to sell here, there is support here, and if price comes here, then we probably have a inverted head and shoulders pattern. Let me draw it for you. Okay, this will be the left shoulder, this is the head, and this is the right shoulder. Okay, if you are a bit more, you know, risky, or rather your risk appetite is bigger, what you can consider is you can consider taking a short, something like this. Okay, something like this, and just do something like that. Okay, because on Friday what we have is we have an engulfing pattern, or rather like a hangman pin bar. Okay, that shows that this resistance is valid. So actually it's possible for you to go short on Monday and try to target here. Okay, just be careful with this level. If this level is broken, of course, then potentially you could look towards the recent swing low right here. Okay, personally I think this is a good trade. I wouldn't mind taking a trade right here. Okay, with this kind of risk to reward, I think it's fine. Right, remember, we are trading with the trend, we are at resistance, we have a nice candlestick pattern, we just take the trade. Okay, as long as the risk to reward makes sense, we take the trade. If it's profitable, good. If it's not, we just cut the loss and we move on. Okay, so that's how trading should be. You shouldn't have to overthink it. As long as you manage your risk, it should be fine. Okay, so just a gentle reminder as I end off this video that next week is NFP week. Okay, so please do not trade breakout trades next week. Right, try to focus on fake out plays, because historically, at least for me, I find that during weeks like this, if I were to trade a fake out plays, I tend to make good money. Okay, so try to buy below support and sell above resistance if that makes sense to you. Okay, but if you do not know what I just said, you don't understand, right? That's why we have our Telegram channel where we send out our signals here for you. So you don't have to actually do the heavy lifting, and you can rely on my team's experience to show you what to trade and where are the key levels that you should be watching out for. Okay, if not, thanks for watching. Really appreciate you spending the time with me this Sunday. Okay, right, please go grab your day trading guide. Please join us in the Telegram channel, because these are all free materials that I've prepared for you. If not, please manage your risk, trade safe, and I'll see you in the Telegram channel.